South Africa's economy had a marginal 0.1% growth in the first quarter of this year. Statistics South Africa's data shows that contributions to the growth came from agriculture, forestry, fishing, transport, storage and communication. Joining us for analysis on the GDP stats for the first quarter of 2025 is Kim Silberman. She's an economist at Matrix Fund Managers. Good afternoon, Kim. Thank you very much for joining us on the program. So 0.1% growth. Some publications have actually gone on to be quite dramatic and say a mere 0.1% growth. Your reaction to this?
Well, the market reaction was slightly positive, actually. I think that's because it beat expectations and markets move on quite a...
All right, it seems we've lost the audio there to Kim Silberman, economist at Matrix. But a very important conversation that we're having. We've been getting reaction from a number of economists just on that 0.1% growth. But as she stated there, that at least with the markets, they've seen some sort of positivity when it comes to that 0.1%. But as stated by myself, that other publications, just a cursory glance across the board, when you look at other media publications, they're talking of very weak economic growth, which is quite concerning, because we do know that economic growth is in fact a key driver of job creation. So many would be quite concerned by that 0.1%, but we're not the experts. Kim will tell us more. Kim, just you were still sharing with us when we lost you there, just giving us your reaction to that 0.1% growth. You're saying it's not all doom and gloom.
Yes, I'm pleased to be back. Well, the market took it quite positively, and that's really because it wasn't in contraction. On the negative front, when you look at the economic growth from a consumption or expenditure, from the expenditure side, which is different from looking at it from the production side, you can see that household consumption was actually the only positive growth factor. Everything else went into contraction. So the really household consumption is what's keeping South Africa afloat at the moment.
Mm-hmm. And then to the specific contributors, when we look at the agricultural sector, it clearly continues to keep South Africa afloat. Your take on just its contribution? I mean, we saw this even in the fourth quarter of 2024.
Yes, I mean, I think when we look at agriculture, you kind of have to break it down into what we consume in South Africa and then what we export. And exports did increase by 1%. So exports were positive. And it looks like that wasn't from the mining sector, because mining contracted by 4%. So it does seem as though we had some agricultural growth, both from the local consumer, because you can see that from consumption growing, and also that we can see it from growth in exports that grew 1%.
Mm-hmm. I do want us to touch on mining and manufacturing, which has decreased significantly. And again, this was recorded even in the fourth quarter of 2024. But before we get there, South Africa's slow growth for some remains quite a concern. This kind of growth means the pressing issue of unemployment cannot be addressed, as stated, because economic growth is essentially that key driver of job creation. And we've heard of the plans to address infrastructure bottlenecks, the 1 trillion that's about to be invested. But what else needs to be done to stimulate this economy?
Yeah, and you touch on the question that we're all facing. And I think the problem really is that we have so many plans, but we don't implement those. And that's something that we've been saying for a very long time. So what we see is on the investment front, over the last 5 years, we've had a contraction of over 5% in investment, and investment also contracted 5% last year. So when we've done some analysis, and it shows that if we want growth, I see your previous caller, also, your previous interview alluded to the fact that we need that magic 2% growth number in order to start turning South Africa's jobs around. And looking at our analysis, you need investment growth to average 4.6% each year for the next 4 years in order to achieve growth of 2%. And that would mean we'd have to turn around from this negative 5% that we've been averaging to a positive 4.6%. And that's going to take some time. And we're seeing transformation. Operation Vulindlela is starting to take us in the right direction.
Yeah.
But this turnaround takes 3 to 4 years. It's not going to be something that we're going to see a massive contribution to growth from in the next year or 2 years.
I suppose then we have to expect this level of growth for the next 2 to 3 years, as you say. Kim, thank you very much for your insights this afternoon. That's Kim Silberman, economist at Matrix Fund Managers.